So when it comes to building real wealth, obviously rates of return matter. The amount you can make every year on your investments, that's important. The amount that you're saving for your future retirement and your future legacy, that is important. But here's something that's often overlooked. It's called inflation. And inflation is a silent killer on a portfolio. In today's world, with inflation higher than we've seen in many years, you need to ensure that you are building your portfolio in a way that is at minimum keeping up with inflation and beyond. Today, I'm going to talk to you about how the most successful retirees build wealth navigating inflation. Keep it right here. Good day, everybody. Chris Herline here of Reap Financial, host of Retire Ready TV every Wednesday on KXAN. That's News Channel 36 here in Austin. Hit the subscribe button if you like our channel and hit the bell for notifications. I drop new content on this channel every week. Today, I'm going to talk about how the most successful investors, retirees, they build wealth while navigating inflation through the years. And here's the deal. You have to stick with me until the end, because I'm going to talk to you about a little known tip, one of the best ways to stay ahead of the inflation game. Okay, so one of the number one ways to stay ahead of inflation is to make sure that you diversify your portfolio, diversify your assets. Now, I know that's a very overused word in the financial world, diversification, right? But you need to have assets that are doing things that are non-correlated with each other, meaning you've got stuff that's going up even when the market's going down. You've got stuff that's going nowhere, even when the market's going down. And when the economy's great, maybe everything is cooperating. But here's the thing. Most investors, they've got a mix of small cap, mid cap, large cap, maybe some international stocks, maybe you got some bonds in there. And that's a great start. But at the end of the day, is that true diversification? Because in 2022, when the stock market and the bond market were suffering, we saw bonds down 10%. We saw stocks and equities down up to 40%, all in the same year. It was like nothing was working. Well, what other asset classes may have been going up? That's your first question. Things like real estate, things like metals, gold, things like digital currencies. There's a number of areas that you can be looking at to further diversify your portfolio. Now, if you think back in 2022, there wasn't a lot of safe money options, right? Banks weren't paying anything. We were going through a pandemic. We were on the back end of a pandemic, better said. And, CD rates, money markets, etc. It was almost like you were forced to go into the market. You didn't really have other options. Well, with the increased interest rates, there's more options than there's ever been in probably the last decade or more. So the thing is about diversification, again, the takeaway is you got to have things that are going up even when the general markets, the more mainstream investments are going down, because inflation doesn't stop, right? It's not like you've got no inflation one year and the next it changes. Inflation is steady, it's constant. We've seen it go up consistently for over 100 years in this country. So another thing I want you to consider, and I just touched on this, but this is a main reason that successful retirees can navigate this. And it's because the high interest rate environment today is more competitive than it's ever been. We've seen rates of 5%, 5.5%, 6% on CDs and multi-year guarantee annuities this year. We see money market rates at 4.5% to 5%. So these are ways that you can have a core position in your portfolio that's going up even when the market's going down. So this is a way that many successful retirees that are trying to take some risk off the table, really kind of mitigate the risk they're holding in the overall when that paycheck stops. This is a great way to do it, is to identify a good number that is not going to go anywhere but up even when the market is not cooperating. Now, we have a lot of questions that come in through our channel, through our TV segments. Be sure and you leave your questions below in the comments section. Now let's talk about some options for more inflation resistant assets, okay? We've talked about equities, we've talked about stocks, these type of things historically have outpaced inflation. Okay, so don't hear me wrong. Stocks, equities, ETFs, these are good areas to have portions of your portfolio to ensure that you are keeping up. Real estate, particularly in Central Texas, historically, we've seen a rather strong real estate market. Here in 2024, we're seeing a huge run up in the gold and metals market. Gold's having one of its best years we've seen in literally a decade. And that's not by accident. It's just we have had massive inflation the last several years. There's a lot going on politically, there's a lot going on economically, and generally in these times, people run to more tangible assets like gold. You're also hearing a lot about digital currencies, Bitcoin, that type of thing. These may potentially be new hedges, new ways to further diversify and hedge against inflation. But here's a main takeaway today, and don't miss this, okay? Maintaining a long-term investment strategy is one of the paramount ways to outpace inflation. Because yes, you're gonna have years in the market where it didn't go up, maybe it went down. You're gonna have banner years in the market where it well outpaced inflation. But when we look at the history of the equity markets, historically, it has outpaced inflation. And so trying to time markets, making knee-jerk or emotional decisions, that can create big problems for the long-term success of your portfolio, the long-term longevity of how long your portfolio will last. Now, this next video gets into more detail about inflation and how it impacts investors. Click here to check it out.